You think earning $150,000 a year will make you rich. The math says otherwise. In 2024, nearly 50% of people earning over $100,000 reported living completely paycheck to paycheck. You believe your financial stress is an income problem. You think if you just get that next promotion or start that side hustle, the pressure will vanish. You are wrong. Your financial stress is not an income problem, it is a behavioral engineering problem. You are actively participating in a system designed to extract every dollar you earn. Most people remain financially paralyzed not because they earn too little, but because they are blind to the psychological traps set up all around them. The middle class operates on a set of predictable, exploitable habits. These habits quietly drain your capital, manufacture artificial debt, and completely destroy your ability to build long-term wealth. You are bleeding out from 1,000 tiny cuts, and society calls it a normal lifestyle. In the next few minutes, we are going to break down the specific psychological financial traps that keep the middle class broke. We will expose the mathematical illusion of the minimum payment. We will deconstruct the car payment treadmill. We will look at the house poor syndrome and the true cost of convenience. By the end of this, you will understand exactly how your own brain is being weaponized against your bank account. Write this down now. True wealth is not defined by how much you earn. It is strictly defined by the gap between your ego and your income. Protect the gap. The first and most devastating trap is lifestyle creep. This is the silent killer of the middle class. When your income increases, your spending rises at the exact same pace. You get a $20,000 raise and suddenly your perfectly functional apartment feels too small. Your reliable car feels outdated. You upgrade your wardrobe, you upgrade your zip code. You elevate your baseline standard of living to match your new paycheck. You are earning more, but you are not getting ahead. The gap between what you earn and what you spend remains exactly at zero. You are just living a more expensive version of broke. The system encourages this. Society equates increased income with the mandatory acquisition of luxury. But every time you inflate your lifestyle to match your salary, you reset your financial progress. You are voluntarily trading your future freedom to impress people today. The wealthy do the exact opposite. They lock their lifestyle costs in place, and when their income spikes, 100% of that new capital goes into wealth-generating assets. They widen the gap, you destroy it. This leads directly into the second trap, the car payment treadmill. The auto industry has brainwashed the middle class into focusing entirely on the monthly payment, completely ignoring the total cost of the asset. You trade in a car you have not even paid off yet for a new one just to get a lower monthly payment. You roll the old negative equity into a brand new, extended 72-month loan. You are renting depreciation. You stay in perpetual rolling debt, constantly paying interest on an asset that is losing value every time you drive it. You never actually own the vehicle outright, you just own the liability. And the banks apply this exact same psychology to your credit cards. This is trap number 3, the minimum payment illusion. Credit card companies offer you tiny, highly affordable minimum payments. It feels manageable, but it is a mathematical trap. The vast majority of that minimum payment goes directly toward compound interest, not the principal balance. By paying only the minimum, a simple $5,000 debt can take over a decade to repay, and it will end up costing you double. You are actively funding the bank's expansion with your own financial ignorance. The fourth trap is the ultimate middle-class dream, buying the absolute most expensive house the bank approves you for. The bank runs the algorithm and tells you that you can afford a massive mortgage. So, you buy it. You maximize your credit. You now own a beautiful home, but it completely consumes your income. This is called house poor syndrome. You are living in a mansion, but you are suffocating. You have absolutely zero liquidity left for savings, for investments, or for emergencies. Your entire financial existence is tied up in a single illiquid physical structure. The home ceases to be a sanctuary. It becomes a financial burden that dictates where you work, how hard you work, and how much stress you must endure. Real wealth requires liquidity. If you cannot pivot, if you cannot survive a 6-month loss of income without losing your house, you are not successful. You are a hostage. Trap number 5 targets your fear of the future. It is the whole life insurance trap. The financial industry aggressively pushes whole life policies, framing them as the ultimate hybrid between an investment and an insurance policy. It sounds safe, it sounds intelligent, it is highly inefficient. Whole life policies are notoriously front-loaded with massive commission fees for the broker who sells them to you. The internal rate of return on the investment portion is incredibly slow and mathematically inferior to the open market. You are paying a massive premium for a bundled product. The financially literate do not bundle. They buy cheap, high-coverage term life insurance to protect their family, and they take the massive difference in cost and invest it directly into index funds or assets they control. Stop buying complex financial products you do not understand simply because a salesman in a suit used the word guaranteed. Now, While you are losing thousands on insurance and cars, you are losing hundreds every week to trap number 6, paying for convenience. This is the modern subscription economy. Food delivery fees, premium app upgrades, multiple streaming services, microtransactions. Individually, a 15 delivery fee seems entirely irrelevant. It feels cheap. You are bleeding to death from 1,000 tiny cuts. When you aggregate these tiny convenience taxes over the course of a year, you are hemorrhaging thousands of dollars. You are trading your capital for a slight reduction in minor daily friction. And why do you do it? Because of trap number 7, keeping up appearances. You finance luxury vacations you cannot afford. You buy designer clothing on credit. You lease experiences strictly to broadcast a specific status to your social circle. You are accumulating hard, unforgiving debt to project a status that disappears the moment the photo is posted. The people you are trying to impress are likely drowning in the exact same debt. It is a collective hallucination. The ego demands validation, and the financial system is more than happy to sell it to you at 22% interest. Because this lifestyle is incredibly stressful, the middle class relies on trap number 8, retail therapy. When you are stressed, anxious, or overwhelmed by the life you have built, you seek immediate emotional regulation. You shop. You buy something new to trigger a brief, pathetic spike of dopamine. Shopping becomes your coping mechanism. But the emotional relief is entirely temporary. The financial damage is permanent. You are treating psychological burnout with consumer debt. This creates a vicious cycle. The debt increases your stress, which increases your need for retail therapy, which increases your debt. And you do this with zero safety net. This leads to trap number 9, the no emergency fund delusion. The middle class lives paycheck to paycheck, operating under the insane assumption that the universe is stable. You assume your car will not break down. You assume your health will not fail. You assume your company will not downsize. When the inevitable emergency strikes, you have zero cash reserves. The unexpected expense is immediately converted into high-interest credit card debt. A lack of preparation turns a minor inconvenience into a generational financial crisis. Trap number 10 is perhaps the most mathematically destructive: delaying retirement savings. The average person tells themselves a very comforting lie. You say, "I will start investing when I make more money. I will start investing when the car is paid off." You postpone the allocation of capital, believing that your future income will easily catch up. You are entirely ignoring the single most powerful force in finance: time. Compound interest does not care about your salary. It cares about duration. By delaying your investments by 5 or 10 years, you are sacrificing hundreds of thousands of dollars in compound growth. You cannot work hard enough in your 50s to recover the compounding cycles you threw away in your 20s. And instead of investing that money, you waste it on trap number 11, the brand loyalty tax. You pay absurd, massive premiums for specific logos and brand names, even when the generic alternative is chemically or functionally identical. You are literally burning capital to walk around as an unpaid billboard for a multi-billion-dollar corporation. Finally, we arrive at trap number 12. When the debt becomes unbearable, the middle class tries to outwork their own stupidity. You fall into the side hustle trap. You take on a second job. You start driving for Uber. You try to launch a freelance business on the weekends. You attempt to increase your income to cover the massive hole caused by your overspending. You cannot out-earn terrible habits. Working more hours does absolutely nothing if the underlying behavioral pattern remains unchanged. If you have a spending problem, a side hustle just gives you more money to waste. You will simply scale your bad habits to match your new, exhausted income level. You remain financially stuck because you are trying to solve a psychological problem with a mechanical solution. Fixing your income is useless until you fix your mind. The brutal reality is this: most financial struggles have absolutely nothing to do with a lack of income. They are the direct result of behavioral patterns engineered by a system that profits from your lack of discipline. The system wants you over-leveraged, overstimulated, and constantly comparing yourself to your neighbors. A stressed, indebted worker is a compliant worker. True financial progress is boring. It is clinical. It requires ruthless emotional control. You must actively fight lifestyle inflation. You must reject unnecessary, depreciating debt. You must prioritize highly liquid emergency funds and begin aggressively investing before you feel ready. You do not build wealth by displaying it. You build wealth by hiding it. You build it by fiercely protecting the gap between what you earn and what you consume. Stop blaming your boss. Stop blaming the economy. Stop blaming your salary. The trap is not the system. The trap is your willing participation in it. Your habits are keeping you broke, and until you accept total responsibility for your psychological triggers, you will remain on the treadmill until the day you die. Study the system. Do not let your habits keep you poor. Subscribe.